Hey everyone, it's been another week, another storm. There's been some rain, some wind, some hail, some tornadoes down south, but we kind of missed that big one on last Friday. But anyway, it's week 11. Les Solgrove here with Des Moines Market Values, Simply Des Moines Market Report for Des Moines and Central Iowa. We're going to jump into this week's show and do a little bit of like looking back in the past. So let's get started here. All right. Well, again, welcome to the show. My name is Les Solgrove, and we are going to talk this week a little bit about what's missing in the marketplace. And we're going to kind of relate it back to a previous date and time and see that we're kind of in the same plane there. But before I get started, number one, I want to thank you all for subscribing. Be sure and hit that subscribe button. If you haven't done so, go to DesMoinesMarketValues.com and open up one of the videos or click on the link within the show notes here to subscribe. Uh, Give you a heads up here, next weekend and the following weekend, I will not be in well, just going to call it what it is, the home studio here. I'm going to be on the road the two next weekends. So we're going to see a little bit of a different show here in next week and the following. And that's all I'm going to tell you to tease you a little bit. But I hope you'll join me because it's going to be kind of an exciting couple of weeks here. So let's jump in to the market here and talk a little bit about the dashboard. We're still seeing lower inventory. We're still around that 3,350 mark, and it would be nice to see us get closer to what we would typically consider a spring market. If you look right over here in the upper right-hand corner, you can see that even though we kind of matched last year's homes listed per week, we're still behind on listing homes week over week. And we're really at that verge of the full-blown spring market. So I'm going to expect here in the next week or two that all heck's going to break loose, and we're going to see a lot more listings kind of coming on the marketplace. And that in turn is going to increase our sale pendings that are accepted weekly. So the good news there is we're pretty much right on track with the same time last year as well. We're very, very close to hitting that 2,000 closed sale mark. So I'll be watching that this week as well. So next weekend, we should definitely see that we've pushed through the 2,000 closed sale milestone. And currently, this is another good sign right here. We're 11 closed sales ahead of last year. So it's not often we can say we're ahead of last year in something like closed sales. So we're kind of making up the deficit there. Median pricing and median sale pricing. We'll talk a little bit about pricing this week's show as well. Not so much the median sale price, but you can see we're staying under $300,000, which is a good sign. So let's go ahead and start the show here. The question is that I'm posing this week is, where are all the sellers? That's kind of what we feel like is maybe missing in the marketplace right now. And if you're a home buyer out there, this is kind of maybe what you're feeling like the market looks like a little bit. There's some houses out there, but maybe they're the ones that have been picked over and kind of left over. And you know what? This is really reminding us a lot of a certain year. And by now that I'm talking about 2019. So let's kind of take a look and see in depth here what the categories of the marketplace look like for this year versus 6 years ago, and it's going to kind of give you an idea. So what I did was I went back into some old graphics. This is from first quarter of 2019, and this is when I was showing you this graphic here was kind of a quarterly graphic, and what you can kind of see here is new listings added each week here. Week 11, we had a pretty good surge of listings coming on the market. 256 homes came on the market versus just over 200 the two previous years. And this is kind of similar to what we're seeing this year, although we're not seeing the big surges, but we're still seeing more inventory compared to the last couple of years. And that's kind of the message here is the red bar here all the way through that first quarter of 2019. We were ahead for the most part of the previous 2 years, with the exception of a couple of weeks there. And if we start to look at offers accepted weekly, so these are the ones the offers that came in and were accepted. Even though we were adding new listings each week, they may not have been quite selling as fast. And this is kind of the uh, that record of that. These are sale pendings, offers accepted during that previous week. So again, just opposite of what we saw with the new listings being added, but we're seeing fewer home sales. And we're kind of feeling that this year, even though this last week, as I mentioned before, we kind of matched last year. You can see back in 2019, it was a different story from 2017 and 2018. The weekly price increases are showing some similarities as well compared to 2019, compared to what we're at today. The number of homes having price reductions is much lower that year than in previous years. And then the price reductions were on the rise. And so while we're still seeing more price reductions than this, typically on a weekly period, it still gives you that idea that, we're really seeing a lot of the similarities going back to 2019. As far as looking back, have you ever looked at Google Earth? It's earth.google.com. It's kind of a fun website to look at. And when you plug an address in there, it takes you out to the global view and kind of then zooms in. And that's kind of the way I feel about what we're looking at here. This is kind of taking that global look and getting my big head out of the way. That goes back to 2009 down here in this left-hand corner. And this shows you our inventory levels going from 2009 all the way through today, March 16th, 2025. And what you see is obviously these ups and downs. Those are our cycles where the low points are typically at the end of the year and the beginning of each year. And then we see inventory start to rise and then fall midway through. But what's kind of interesting here is if you look at where we're at today in 2025, and you go all the way back again to this 2019 date, there's a lot of similarities here. If you look at the peaks in 2018 to 2019, we're not too far off of what we had in 24 to 2025. And our inventory levels are expected to rise this year. So it's very possible. And this is part of the reason I'm basing my predictions are based on 2019. I'm saying we're going to hit above 4,000 listings this year. And I think if we do exactly what we saw in 2019, that's pretty much where it's going to happen there. If you zoom in just a little bit, now this is 2019 to date. So just looking back those last 6 years here, what you see is, this again, we didn't quite peak like we thought we did in 2024 with new listings, but it's very, very similar. And we're pretty close to where we were at this same point in time in March of 2019. So again, without any outside influences hitting the marketplace, we're going to kind of expect this to continue and rise. And, we can look back and say, thank God we're not into this anymore. This is all through those COVID years when we had all that low inventory. So what I did here was I looked at the all homes for sale category. And again, the green column is the number of homes for sale each week. So it's a snapshot each week. And we ended last week at 3,357 homes on the market. And the year before is the black dotted line or dashed line there. So we're ahead of 2024. But then when I overlaid that 2019 graphic, again, it just shows you we're almost lockstep with where we were in 2019. And that's, if we can look at the past and say this is kind of what's going to happen, this is going to be a good sign for inventory. We'd obviously like to see inventory rise above 4,500, but that's not out of the realm that we could maybe hit that later in the year. If we look at the median list price, okay, so we know that prices are softening just a bit. I hesitate to say, and I've said it the last couple of weeks, and I've really been rethinking my terminology here. Pricing is softening. It is not going down, it is softening. And what I mean by that is we're not seeing the huge rising of prices like we saw last year or the years before. We're just seeing the numbers kind of rise a little bit, and it's not quite at the same pace. Does that mean we're not going to get as high as last year? No, I think we probably will as we get into the spring market. We're definitely going to see home prices rise, but if we stay true to form here, we will likely stay underneath some of these prices. Again, this all depends on outside influences. If we see a huge drop of mortgage interest rates, that's going to bring a lot more buyers into the market. And by doing so, you might trigger some more listings onto the market that may then at that point feel like they're in command. And really, sellers still are in kind of command in our marketplace with the seller's market overall. If we look at, let's go to the next slide here. All right, if we go to the median list price compared to 2019, so this is the same graphic, just overlaying that 2019 line, you can see that we're well ahead of pricing from 2019. It's kind of the gap. So what I'm trying to look at here is, we saw a rise of median list price all the way through about week 15, and then it kind of started its way back down. And last year we kind of see that same rise through about week 15, 16. It kind of stabilized and then really stabilized most of the summer and then started to go back down into the fall. So, but the difference is we can see these gaps are pretty consistent from the 2025 numbers to the 2019. So this tells me if we continue to see that same gap, at the very least, we'll see kind of a similar market, even though the pricing is much higher than it was back then. So looking at this from existing homes. Now, last graphic was all homes on the market. So we're looking at kind of the bulk of what's being sold out there. This is existing resale properties, not including condo townhomes, not including new construction. And you can kind of see a similar pattern again there. The median list price is just over 325 at 329 this past week. And we have kind of seen a pretty steady rise from 2019 to that same rate. So again, you kind of see the similarities here from that graphic there over. Sorry, I just bumped my computer there. And we see that kind of come down. As far as new home prices go, really last year we were right around that $400,000 price point most of the year. We had 2 weeks earlier the 2 weeks previous to this week, we were just above $400,000, and it's kind of settled down. There's an old adage that says water will seek its own level, and I think that's a good comparison to new construction. I think what they're finding out there is that home buyers are basically trying to buy no more than that $400,000 price point, and at least in the last couple of years, and we're kind of seeing that same thing happen here with pricing this year. So we'll see what that looks like anyway as we move forward. As far as mortgage interest rates, let's see if there's any similarities there. So this is the old standby mortgage rate year over year, looking back to 2020. And I realized I had never added 2019 to this look back, and so I did go ahead and drop 2019 into this graphic as well. And you can see here now it's that black larger dashed line across the bottom. We were doing pretty good business back in 2019, and rates were right around that 4%. You notice the stability here from June through December. It got underneath 4% and kind of stayed there. Now, will we get back to under 4% this year? Likely not, almost guaranteed not. But if we can kind of stabilize, again, my preference would be for us to stabilize under 6%, between that 5 and 6% number. But if we could stabilize at least somewhere for several weeks, that's going to give the home buyers that confidence that they're not going to get priced out or have to make a decision based on what interest rates are doing by going up or down. And as rates come down, a lot of home buyers tend to say, "Oh, I'm going to wait till the rate hits the bottom." Well, if you look at the last couple of years, there really isn't a bottom. I mean, it just kind of goes within a steady pace there, and that's what we're looking for here. So just looking at just stripping everything away except for 2019 and 2025. Again, we're kind of seeing that similar path there in the spring. The first couple of weeks of the year, rates went up here for our market this year. They were steady through about the month of March, mid-March anyway, and then they came down. And again, we'd love to see this same trajectory and get it down closer to that 5.5 to 6% rate, because these are national rates. We know that the localized rates are going to be below that. In fact, I heard this past week that FHA mortgages currently have been quoted at just under 6%. So that's a good sign. If you're a home buyer out there, take the advantage right now, and before you're in competition with 8 or 9 different buyers on the same property, right now is probably your best opportunity. So we're going to end the show this week with, and again, get my head out of the way, it's 2009 is the annual closed sale graphic. It starts in 2009 all the way to 2025. And obviously the little asterisk here means that this is year to date. We're just under that 2000 closed sales. What you can see here, if we're going to try to compare this to 2019, there's 2019 with 14,400 sales. And that's kind of my prediction this year, is to beat the last 2 years, but not by very much. And so if we were to add an additional 800 to 1,000 closed sales, we would be right on track with 2019. And so start looking back in your sales activity, your buyer activity for the last 5 or 6 years, if you've been in the business that long, and kind of see what your activity was back in 2019 and your listing activity, days on market, and things like that. Because I think as we move through the year, we'll start to do more comparisons to see if we're back in that kind of a market. And familiarity is really a good feeling as far as that goes. So anyway, that's the show this week. Again, thank you for subscribing to the channel. Please join me next week and the following week. We will be on the road, so it might be later in the day when these are recorded, and they may not be as high quality graphics because I'll be working from a different computer, but you'll get the idea here. So thanks again for joining me. My name is Les Solgrove. This is Simply Des Moines Market Values for week 11, 2025. See you all again next week.